Hello, everybody. Good afternoon. My name is Diederik Brugink, and I'm heading the Payments, Digital Finance and Innovation team here at the European Savings and Retail Banking Group, ESBG, as well as the World Savings and Retail Banking Institute, WSBI. I wish you a very good afternoon from Brussels today, and it's a pleasure to welcome you to this 27th edition of our Spotlight event. The European Savings and Group, or in Brussels better known as ESBG, is the association that represents the locally focused European banking sector, helping savings and retail banks in 21 European countries strengthen their unique approach that focuses on providing service to local communities and boosting SMEs. The sister organization, WSBI, the World Savings and Retail Banking Institute, is representing savings and retail banks worldwide. Our Spotlight event is a series that we actually launched in 2019. And initially it was positioned as a more or less monthly lunchtime debate with different distinguished speakers from the Brussels bubble, taking place here at our premises in Brussels. Now these have, for the time being, evolved into virtual events, allowing us on the one hand to attract speakers from further abroad, but also to attract a broader audience from across the globe, as also evidenced by the audience today. And for this particular event, we have invited Mr. Jan Vermeulen, Coordinator Retail Payments, Prudential Supervision and Oversight at the National Bank of Belgium, to speak with us about what's going on in payments at large. So please expect to hear buzzwords like fintech, payments, crypto and digital euro, just to name a few. And Jan will be happy to share some insights on these. But just before giving you the floor, Jan, please let me remind the audience that there will be some room for questions at the end of Jan's presentations, and you can leave your questions in the question section that you can find at the right hand of your screen. You can also use the chat function if you need some technical support or you want to chat with the other people in the audience. But without further ado, I now hand over to Jan. Jan, please, the audience is all ears. Thank you very much for being here with us.
Thank you very much, Diederik. Thank you for inviting me here for your distinguished talks, regular talks, which are well known in the sector. And good afternoon to everybody. I want today give you an overview of how we at the National Bank of Belgium think about the recent trends and evolutions in the payments world, and especially fintech. It's the situation, mainly the situation in Belgium, but I think it's very comparable to most of the countries in Europe. So let me start with showing you the agenda. I suppose so. I will now click yes. So what do I have for you as an agenda? I have a small introduction, and then we will talk about trends in payments industry in Europe, the crypto assets, path to a digital euro, and conclusions and trends for the future. So in my introduction, sorry for doing that, but I would like to make some publicity. I know it's not common for a central banker to make publicity, but I would like to show you our yearly publication of our financial market infrastructures and payment services report. So this year again, we have published for the 6th time now an extensive report on what's happening in the market infrastructure and payments area in Belgium, and how it's related to the European situation. You all know that we host a number of significant financial market infrastructures which have international systemic relevance, and we provide in these publication a comprehensive overview of the National Bank of Belgium's both oversight and supervision of these systems. So, for example, at the right hand side, you see here our cover page of our latest report published in June already. And we are talking there, there's different chapters on each financial market infrastructure, SWIFT, because for SWIFT, the National Bank of Belgium is the lead oversight global for all central banks in the world. MasterCard Europe, also there, the National Bank of Belgium is the lead oversight together with the ECB, because Mastercard Europe is located in Belgium, and also the infrastructures Euroclear and Bank of New York Mellon, which are located in Belgium, are dealt by us. The other chapters in the report concern the payment services, cybersecurity, CBDC, market and crypto assets, as well as, for example, very specific thematic articles, such as, for example, we publish something on the consequences of the war, of the Russian-Ukraine war in the payments area. So let's go then over now to the payments. What are the trends in the payment industry? Let me first set up the basic elements of the payments ecosystem, where we see 5 different components. Payment services allow money to fulfill its role as accepted means of exchange within our economic system. This is not just a sentence, a high-level sentence. We will see with MiCA, with stable coins and CBDC, that it's a real valid expression. These 5 different circles represent the different components of the payments ecosystem, which before, years ago, those 5 circles were horizontally or vertically integrated in just one single entity, or 2 or 3 entities. Nowadays, those 5 different components are more and more differentiated from each other and have different backgrounds. Payment service providers and other providers offer payment services to the public based on payment schemes. So the service providers offer services to the public, and they do it based on schemes. And what are schemes? Payment schemes are the brands of payment instruments and constitute a set of governance rules. For example, Maestro, Visa, the SEPA credit transfer, the Bank Contact Belgium are all schemes. And those schemes are brands of payment instruments. And payment instruments are the tools to make payments, credit transfers, payment cards, and direct debits, just to name the 3 most important ones. And those payment instruments are cleared and settled in payment systems. For example, Target2, or in Belgium, the National ACH, the CEC. And often those payment systems will rely on processors who are operating payment systems, such as STED, such as Worldline, also the National Bank of Belgium and other central banks who are operators of Target2. Now, each of those different components have these days a different legislative framework. For example, the payment service providers are prone to the PSD2, to the Payment Services Directive. The payment schemes and payment instruments are put under an oversight regime of the central banks. For example, or these days, the renewed Eurosystem PISA framework. Payment systems are also covered by specific oversight regimes, the Systemically Important Payment Systems Regulation or the Oversight Framework for Retail Payments. And finally, there's also often in different countries specific laws on processing activities. So this is, let's say, the context of the payments ecosystem. What do we see? What do we see in Belgium, and by comparison or by extension also in Europe? This is the evolution of the number of payment institutions and electronic money institutions. The dark graphs here are electronic money institutions. You can see that there was a rise, an increase, a considerable increase after the PSD1 of the electronic money institutions. But nowadays, this is declining. I will further on, I will make some conclusion why would that be. The second evolution that we see is the rise, the constant rise of the payment institutions in the light blue, graphs, except for 2018. Why? Because in 2018, PSD2 was implemented in all countries of the EEA, and the market was waiting for it, and some of those payment institutions could not fulfill all new requirements of PSD2. But from then, we see suddenly arising the yellow bars, which are the account information services. So the so-called Fintech, the so-called third-party providers, TPPs, are often labeled as the Fintech guys. The green and the grays are branches of foreign institutions. So already to mention what I will say at the end, at my conclusion, is that we have the impression that the fintech hype in the payments area is somewhat over. There's still a growth of AS here, but we are already informed that in 2023 several licenses will be withdrawn in Belgium. So can we make now a conclusion on how the evolution of payment institutions is progressing? It's difficult. It's difficult. Why? Because there are, let's say, 5 different business models. I sometimes call them subsectors of the payment institutions. You have, first of all, the card payments, so the issuing and acquiring services. So the service also labeled as service 5 in the PSD. There we see, first of all, which I didn't mention on this slide, more and more competition from multi-country players. So in Belgium, traditionally there was one player who had a major position and a huge market share in Belgium. More and more foreign competitors enter the market. And a second thing is that we see in Europe, so not only in Belgium, but in Europe, in several countries now, payment institutions are fulfilling the function of cash distribution of banks. So new payment institutions are set up to be an outsourcing of cash for banks. So that's the evolution we see in the card business. Secondly, money remitters. In the money remittance sector, we see that digitalization puts the traditional and meaning the manual business under high pressure. So the traditional money remitters offering services via the agents are having it more and more difficult. And I think that a further consolidation is unavoidable in the sector. And a second issue for money remitters is, of course, the ongoing de-risking issues, which is not, of course, not only an issue for them, but also for us as a central bank, and to keep an even level playing field in the market. Then the third one, account information services and payment initiation services. As I already mentioned, the market is cooling down, I think, amongst other, because the open banking and strong customer authentication requirements are complex and difficult to implement. But I will come back to more general conclusions at the end. The online marketplaces have fear or have a lot of difficulties with competition with banks, and their governance issues. They're also struggling often with governance issues. And finally, the hybrid institutions, which is also a sector within the payment institutions, or payment institutions delivering consumer credit and payments, which mostly are affluent or swift sector without too much hiccups. So it's not only the sector that changes, it's of course also consumers are changing. First of all, the behavior of consumers, because the expectations are changing, especially now with instant payments. Sometimes I think I have the impression people don't ask anymore, will instant payments become the new normal? I think the question is, when will it become the new normal? And I think it's rather soon, because the European Commission has just issued its regulation, or has issued a draft for adapting the SEPA regulation in order to oblige payment service providers, banks mainly, to offer instant payments to the public at the same price as a national SCTs. Other innovations such as QR codes, NFC, offer a more and more wide range of payment channels with various authentication methods, without the payment service user being aware of the underlying payment instrument. And in light of the transparency and of the review of PSD3, I think this is a very important one. You can see that I'm not of the youngest one, so I still remember making a credit transfer, and this was on a paper. This was on you had a paper in your hands, which was a credit transfer or a check, or you had a card. Nowadays, with the mobile, people are paying with their mobile. So often the user will choose the most convenient payment method at the checkout, but will not know anymore which is the underlying transaction, whether it's a credit card transaction, a direct debit, or a credit transfer. And of course, also the tech giants are also interesting to probably include payment means in their networks. A short word on crypto assets. As you know, there's an upcoming markets in crypto assets regulation in the EU, and I think it's important to set the scene here. So there's three different forms of money, let's say. I know there's a lot of many possibility of many ways to present this, but there's a liability of central bank cash or central bank deposits. You have a liability of a private entity, commercial bank money, e-money, or stable coins with an identifiable entity and which are backed by assets. And then the third one is the most famous example is the Bitcoin. And Bitcoin is not a liability because it is not backed by any assets. And this is, of course, a situation where we as regulators want to change something. So in order to deal with this new class of assets, a new framework will be proposed, and stable coins in particular will be subject to strict regulations. Not only the stable coins itself, but also the gateways. So I mean the internet platforms which are doing the trading, the selling and buying of those stable coins. Anti-money laundering has already incorporated some of those crypto assets, leading to strict norms. And we think that MiCA will improve consumer protection through various transparency requirements, in case of loss or market abuse. You all know that the MiCA itself is being set up to regulate mainly so three things. First, e-money tokens. That would be tokens which are backed by a single currency, or by different, or otherwise you would have the asset reference tokens. So there's a second regulated, the second topic in scope. These are the tokens which are backed by different currencies and or other equity or bonds or shares or whatever, or even gold, or other things. And the third thing which will be regulated is, as I said, the gateways which offer the services to buy and sell crypto assets. Now, from crypto assets, it's a small step to a digital euro. Again, same slide here, except here we will add something. In the left bar at the bottom, there you see the retail CBDC digital euro. So it's important to say we do not want to replace cash, we want to complement it. And we want to have a digital euro which have the same or more or less the same functionalities, the same features as a banknote. And the aim is, the ultimate aim is to maintain a costless access for citizens' basic payment needs to a simple, risk-free and trusted digital means of payment. So for businesses, the digital euro should be a low-cost instrument that should be easy to implement with a fast access to money. And for civilians, we aim to have a digital euro for lower cost in stores and with, of course, a maximum of digital privacy and with the possibility to pay everywhere in Europe, online and offline. So the money is and will remain a public good to the benefit of everyone. That's the main story. Now, already a few decisions have been made, but not all of them. For example, the offline usability. It has been decided that the digital euro will be available or usable in both online conditions and offline conditions. So when payer and payee are not connected with the internet, there would be also a possibility to transfer digital euros via tokens probably via tokens in the kernel, which are stored in the kernel of a mobile phone. Then the transfer mechanism. A decision is being weighed whether to proceed with a token-based or account-based system. Gradually, the consensus is growing that it will be an account-based system where every citizen would have somewhere, somehow, an account with the balance of his digital euros. The third aspect is privacy. You may know that in October 2020 there was a first report published, and there was a consultation on the CBDC, a public consultation, and the issue which the public at large indicated as being the crucial for them or most important, that was the privacy. And the second issue, which was important for public, was convenience. So privacy, very important, also financial stability. So what we of course do not want is to disintermediate the financial intermediaries, the payment service providers at this stage. So for that, there will be several measures in order that the traditional function of banks remains intact. And finally, the legal tender will also be an important issue to be dealt together with the European Commission to define how to define that central bank digital currency is also legal tender, and why and how it needs to be used in daily life. So I will jump over now to conclusions and trends for the future. So the first one, which I already indicated, is that the Payment Services Directive, the version 2, did not bring about a significant increase in competition. There are a few reasons, of course, which will be on this and next slide. I'm sorry. The lack of a standardized API was clearly an obstacle. So each and every bank had to establish, to design and implement its own API. There were some groups, there was some standardization, but in some cases in some countries there was no standardization at all. So the open banking has not been an entirely successful business model. So, and I have to be prudent here, it has certainly not been a success in the B2C area. There have been successful business models in the B2B area, where some sectors or some types of companies who were already active in data in data manipulation, such as accountancy firms and so on, are horizontally integrating invoices, tax administration, payments, and all the different elements of a horizontal chain from ordering something until paying invoices in the company's payment chain. What do we see? We have alliances, different alliances between new fintech models and incumbents, and also in some cases there's insourcing. So the major incumbents, so the banks, are insourcing some of those new business models. So certainly in Belgium, we have traditionally we have very strong incumbents in Belgium, and I think that's also one of the reasons why a lot of those new fintech models have built alliances and are insourced by banks. Except of course the competition was significantly increased in the card acquiring service business. As I said earlier, we see more and more international acquirers being active in other countries, also in Belgium. So on the one hand, we had the open banking to foster competition in the payments market, but this went alongside. There was the need to enhance security, which was set up by the strong customer authentication principles, but they were often seen as overly complex and hard to be applied within a complex payment chain. But so of course SCA was very difficult to implement. As a regulator, we have been struggling with all the different stakeholders, PSPs, but also merchants, of course, and acquirers. In any case, we have to mention that an important success is, of course, that fraud rates are decreasing due to the wide introduction of SCA. Then another issue which I would like to mention is the moving digitization brings in new risk elements, and this digitization went very fast in or had a new boom, let's say, was booming in the COVID period, or accelerated due to the COVID period. So IT security, it becomes more and more important. We see that the sector of payment institutions and electronic money institutions are relying very heavily on outsourcing. So in our work, regulatory work, we are going to concentrate ourselves in the future on outsourcing, and also consequently also the cyber security issues. So as we saw before in the graph, the e-money number of e-money institutions is slowly declining, and I think that in its traditional legal concept, defined concept from the PSD2 and Electronic Money Directive, I don't know if this will have lots, if e-money still has a bright future. And there's a few reasons. Firstly, there's a EU markets in crypto assets framework, so MiCA, which I already mentioned. So there's a new concept of e-money tokens. So I wonder if once the MiCA is implemented, if the traditional e-money will still stay alive, and why I think that the e-money tokens concept from MiCA could replace the traditional e-money. Now, also the traditional e-money has, I think, some fierce competition of instant payments, because the traditional concept of e-money says you prepay something. So the question is, why should a payment service user prepay funds, while he can, at the moment of buying something, he can make an instant payment. And that's the next bullet. Instant payments will certainly create new business models and may compete with card payments. Then one of or two main reasons why a lot of the smaller PIs, fintech, had difficulties to survive or to make its way. That's the underestimation of the compliance costs. Those new players, especially the smaller ones, do really underestimate all the legal requirements which you find in the PSD. And at the same time, they overestimate the success of their new business models. I think that probably everybody in the call is convinced of the fact that the payments business is and will remain a volume-based driven business. You need an enormous volume of payments. It's difficult to charge for payments. And I think it's even more difficult to charge for account information services. So this is also a real challenge. Everybody knows that data is the gold, is a new gold, but you have still to monetize the data, and this is not always very easy. And then my last point is about the negotiations which started on the Payment Services Directive version 3. There's many discussion points, of course, that will be on the table. I just mentioned a few of them. The first one, e-money, the e-money and crypto assets overlap, which I already mentioned. Will the electronic money directive be integrated or repealed by PSD3? Are they going to be integrated in MiCA? We don't know yet, but it's certainly a necessity to think to reflect on that. Then the second issue is technical service providers. When and how to include them in the scope. Excuse me. The technical service providers, such as, for example, tokenization services. Do they need to have a license? Yes or no? In line with that, the third point: do payment systems and or schemes need a license to operate? It's another relevant question. And then what we also see these days more and more are new business models, such as the virtual IBAN issuing, which we are dealing with these days. And for example, also the buy now, pay later business models. Are those new payment services? Yes or no? How will we deal with that? Then the account information services. Some voices, I hear some voices asking, also relating to all the
Apologies, it seems we have lost Jan for a moment. So please bear with us while we try to get him back into this meeting. So please bear with us for a moment. And he should be there any moment now, if I'm not mistaken. And meanwhile, please, and I notice some people already took the opportunity to do so. But if you have any questions for Jan, you can already post them in the question box, which you see at the right-hand bottom of your screen. It's one of the buttons you can click. So there's a chat function and there's a questions function. But please bear with us whilst we're trying to get back in touch with Jan.
I back in the call?
Yes, thank you, Jan, and apologies to the audience for the inconvenience, but here we go.
I'm very sorry about that. Where was I? Where did the connection went wrong?
You were going through the negotiations on PSD3, and you were talking about the AIS services, whether that's really a payment services or not, and the data is the new gold.
Okay. Thank you. So I was really nearly at the end. So then another issue is the SCA credential issued by TPPs. Should they be accepted by banks? Because as you know, SCA is now defined or is now done by credentials of the banks, which are opening up their payment accounts data. So because there are a lot of problems with this, voices mentioned to force banks to accept the credentials issued by TPPs, of course, with the liability shift. In that case, it's the TPPs who become liable in case of fraud or problems. And then the last negotiation issue, oh no, not the last, one other important negotiation issue will be the de-risking issue, whereby payment institutions and electronic money institutions still have a lot of problems to open up and maintain the payment accounts with incumbents. So that was very fast, I think, an overview. I'm even a bit early, I think. Apologies for that, Diederik. Normally, I'm never early, but this time I am. I'm sorry.
No problem, Jan, and I think the people in the audience will very much appreciate, because there were already a lot of questions appearing in the chat box, but I will use the privilege of being the moderator to start with the first question. And one of the topics you mentioned, Jan, was the de-risking. I think you can look at it at two layers. Of course, licensed institutions are the gatekeeper of the financial system, and rightfully so. But before those licensed institutions can become a licensed institution, they have to pass by the super gatekeeper, which is basically the national competent authority, or the National Bank of Belgium in the case of those who want to enter for a license in Belgium. And you already mentioned topics like, okay, business, the payments business is a volume-driven business. It's hard to charge for it. I also heard fintech entrepreneurs saying, okay, there are 100 billion cashless payments in Europe, and if I would just be able to make 1% in profit of that, I can make millions. I assume you have to deal with challenges like that. Consumers don't want to pay for the privilege of being paid. Retailers maybe want to pay a little bit for the privilege of being paid. How are you? Are you not going to sit on the seat of the entrepreneur and assess, for example, that business plan, the likelihood of it, and the long-term sustainability in your assessments? How are you and other the risks involved in terms of de-risking? How do you see the role in assessing possible new entrants that want to obtain a license here in Belgium?
Yeah, thank you for this question, Diederik. Well, it's in fact this is a changing practice. With this, I mean in the beginning with PSD2, when there were newcomers, we were just checking if there was a business plan, if it was looking okay, if this was realistic. We always asked three scenarios in the business plan. So if an applicant comes to us and he wants to become a PI or an AIS, we ask him, give us three business plans. One is the normal one, the regular one. One is successful one, and one is the worst case one. And then on the basis of that, we were allowing them. Now, a few years later, we realize that almost none of them reached the worst case scenario. So what we are doing is we are becoming much more stringent, and we assess much more much more in detail the business plans, and we are more strict now on the new business plans. And for example, we request now for newcomers an exit plan, because this is also a lesson. Of course, also a regulator gets lessons during after some years. So we saw that with PSD2, some started, they burned their capital in 1 or 2 years, and then what? So now we are asking exit plans. Now, of course, I have to add that this more pragmatic approach from a few years ago went also along with the Brexit. 2018-19, Belgian politicians went to and also representatives of us and of other regulators went to London saying, "Come to Belgium, Brussels, financial marketplace in Europe." So this was more, but now these days are gone, and things are getting more, and we are getting more strict.
Okay, thanks, Jan. And then let's go to the questions from the audience. The first two are PSD2 and Open Finance and e-money directive related. The first question comes from UniCredit, Jean-Luc De Imperio. He is asking about your view that you stated that PSD2 open banking was in fact kind of a failure. So what would be your suggestion to the policymakers in the current review to push more on open finance and open data?
Please don't mention that I said that open banking is a failure to my friends of the European Commission, because they won't let me in anymore. No. It's I think I have to nuance a little bit with what I said. I think that the open banking was very difficult to implement and overly complex. And it was a failure, let's say, in the area of customer B2C. I think in B2B there were interesting models, but which have been mainly in Belgium, in any case, been incorporated with the incumbents. Now on PSD3, I think that a lot of people in the sector know that one API standard would be beneficial. But of course, the difficulty is now that every single bank has implemented its API, and I think there are more or less 5 large standards. Now changing this again into one standard or a few standards is putting again costs on the banks, which is of course very difficult to do. So and my second point is again the open banking, especially the AIS. We still need to reflect in what sense it is really a payment service.
Yeah, I fully agree with you. And the question, of course, if someone is also not successful, one could also argue maybe there's no clear demand for it, or maybe the underlying business model is not sufficiently mature for participants to deal with it. But let's move to the yeah.
Yes, exactly. I forgot one thing to mention. I think a lot of banks are offering since many years analysis of data of their customers. It's so this account information service already existed, I think, in a lot of banks. Certainly in Belgium, some banks are giving analysis or data comparisons of their clients in their web banking environments. So then it's very difficult to compete, of course, as a newcomer.
That's also true. Then to the audience, if you have questions, don't hesitate to ask them in the questions box. There are always some questions there that you can upvote. But the next question comes from Bird & Bird, which is a law firm here in Brussels. Jan is aware of them. And it's from Peter Pavlivovich from Bird & Bird, asking about how do you see the merit of merging the PSD2 and the e-money directive? And there were some hints at it also in the EBA response to the request from advice for the European Commission. And the question is also maybe the merit of removing the separation between the concept of payment institutions and EMIs might be something worth considering. What are your views on that, Jan?
No, I totally agree with this. I totally agree with this, and I don't think it's a secret when I say that. And also, we already proposed to repeal the EMD and to insert a new service in the Payment Services Directive. So one way to handle it could be that you establish a service, let's say service number 9. We already have 8 services defined in PSD. You could define a 9th service, which could be issuing and redemption of e-money. So this would be a handy way of repealing EMD and to stay away in a first stage from the MiCA, from the markets in crypto assets. Because as I said, this is really still an unknown, and I have the impression that the Commission will go on with the markets in crypto assets where e-tokens are defined, and at the same time you could maintain e-money in the PSD2. Maybe in the next version the two could be merged, but for the time being, I think they will stay apart, the e-money tokens in MiCA and e-money in PSD. But I'm rather in favor of issuing or to make a new payment service and to label it issuing and redemption of e-money.
Thanks, Jan. That's quite an interesting view. And just also the next questions that we have so far are related to the digital euro. But let me ask a question in between to bridge that gap. I think indeed the introduction of the digital euro is imminent. It will certainly come. What is the future for e-money institutions in a digital environment? Looking just from an end user point of view, maybe it's a safer bet to put my money, if they want to have it different from either cash or commercial bank money, either put it in a digital euro rather than into the wallet of an e-money institution provider. Is it thinking as a consumer, is that right? And if so, what could be the future of e-money institutions here in Europe? Jan?
Indeed, I already said that e-money is, I think, certainly in Belgium, it's gradually disappearing because prepaid money in this world and with instant payments has not a future. Now, indeed, there can be a problem with digital euros and electronic money because the concepts would be comparable. Now, the difference is that the e-money is often used in very specific use cases, while the digital euro and your wallet of digital euros should be ubiquitous and should be used everywhere with all merchants and with all peers. So it's a more general use, and you give there a very interesting example, because we do not want to cannibalize the market initiatives. And as we say sometimes when we discuss within the central bank and with other central banks, we want to establish a digital euro, which should of course be successful, but not too successful. We do not want to replace existing market initiatives, and that's of course a very difficult balance to strike. And we are still not out of the we're still not out of the discussions. Because, and by the way, I think the CBDC will be developed, but the formal and official decision has not been taken yet.
That's right, indeed. The Governing Council will only take the decision in the third quarter of next year, as we unfold. But one of the key questions from the industry as well, and it's also a question asked by Rafael Deli from Bolt, a consultancy firm here in Brussels. What is the case? It's all, if we read the planets right, it's up to the banks to become the distributors of the digital euro going forward, if it's going to be implemented. Key question is, what's in it for banks in doing so? What would they gain from it?
It's again a difficult one. As a general principle, probably banks are happy that cash is not used or used very, very few. So in that case, a digital euro would be better for the banks because there's less costs for cash. And then secondly, there will be a certain remuneration model. A certain remuneration model, again, which would not push out or kill the existing payment and card payment schemes. Um, so we think that banks should offer to have should offer central bank digital currency to have a broad offering to the public. Yeah, that's more or less it, but much more precise.
Yeah, I can imagine. It's also more the Frankfurt is in the lead on this one. And the next question is a bit related to that. If we going to see the introduction of a digital euro in 5 years from now. You mentioned the instant payments regulation that's being introduced, which is also aims at having instant payments being introduced at the point of interaction. If we just look at the pan-European statistics, all cashless transactions show a growth rate of 6% over year over the past 5 years. But if we zoom in on cards, it even shows a growth rate of 10% or 10.6%, if I'm not mistaken. So that shows that the customers and the banks and the merchants, by the way, as well, are very keen to use their cards. You can always say that maybe some are addicted to it. So we're going to also introduce instant payment in that mix. In the future, we're going to introduce a digital euro in the mix. There's still the good old cash in there. How are we going to get people using a digital euro? What will be the drivers for them to pick these up?
Here we touch also a very political issue, because I know that the banks were establishing also new initiatives, such as EPI, and I have sometimes the impression that banks refrain a little bit to innovate further or with new products in order to wait what the digital euro will bring. And I think rightfully, yeah. So the digital euro will in any case, there will be a remuneration for the banks, of course, because they won't have to do it for free, yeah? Because otherwise, if there's no incentive, it will certainly not be offered to the public. Yes, that's more or less it. I think. Did I answer the question?
Yeah, I think so. The question was a bit broader, but I think we also have to be, on the one hand, conscious about what you're allowed to say about it. On the one hand, and on the other hand, also conscious about the time, which we are about to reach the end of our session today. So I would like to thank you very much, Jan, for these very interesting and quite, I would say, sometimes provocative insights, which is always very, very nice also for the debate as a whole. So thank you very much for being here with us today. I would also like to thank the audience for taking the time to listen in to our Spotlight event. Rest assured that we will try to organize more of these type of events in the course of next year. So stay tuned. But having said that, please join me in thanking Jan for his very nice insights. We really much appreciate it. Maybe we can take the temperature in the future, in not a distant future. But with that, I would like to terminate this webinar. Thanks all for being here with us. Have a very nice afternoon. Thank you very much. Take care. Bye-bye.
Bye-bye.